Did you know that Bill Gates makes a cool $1.3 million a day? As the legendary founder of Microsoft, Bill Gates is not only renowned for his contributions to technology, but also for his savvy investment strategies. With a net worth of over $150 billion, Gates generates a staggering $1.3 million per day in dividend income. His portfolio is a testament to the power of dividend investing, focusing heavily on income-generating assets. But how is this even possible? What does Gates invest in? Well, let's explore this together, breaking it down into two segments: the top dividend-paying stocks he owns, as well as some of the highest-yielding stocks he owns. Without further ado, let's get into it. Here, Canadian National Railway, CNI, stands out as one of the top dividend-paying stocks in Bill Gates' portfolio. Gates holds a significant position in this company, owning 54 million shares valued at $6.6 billion. This substantial investment underscores his confidence in the company's ability to generate steady and reliable income. CNI pays a quarterly dividend of 62 cents per share, which translates to an impressive annual payout for Gates. Over the past 12 months, this investment has provided Gates with $238 per share, amounting to $130 million in dividends. The performance of the stock over the past decade has been robust, with a 10-year return of 84%. This demonstrates the company's resilience and consistent growth, making it an attractive option for dividend investors like Gates. The company's 5-year dividend compound annual growth rate stands at 10.5%, indicating a strong commitment to increasing shareholder returns. This growth rate is complemented by a payout ratio of 45%, ensuring that the dividends are sustainable and backed by solid financials. Their ability to maintain long-term steady growth in dividends is a key factor in its appeal. The company's operations in the essential rail transport sector provide a stable and continuous demand for its services. This stability is reflected in its consistent dividend payouts, making it a reliable source of income for investors. As you may have already guessed, Microsoft, MSFT, stands out as one of Bill Gates' top dividend-paying stocks, reflecting his legacy and investment insight. Gates owns 36.5 million Microsoft shares, currently valued at $16.1 billion. This substantial stake in the company he founded underscores the enduring value and growth potential of Microsoft. The company pays an annual dividend rate of $3 per share, which translates to an impressive $109 million in annual dividends for Gates. Over the past decade, Microsoft's performance has been nothing short of remarkable. The company has delivered significant returns, driven by its innovative products, strategic acquisitions, and expansion into new markets. Its consistent dividend growth rate of 8 to 10% annually highlights Microsoft's commitment to returning value to its shareholders. This steady dividend increase is a testament to the company's robust financial health and ability to generate strong cash flows. Despite a relatively modest dividend yield of 0.67%, Microsoft's dividends are supported by a low payout ratio. This low payout ratio indicates that the company retains a substantial portion of its earnings, which is reinvested into its business to drive further growth and innovation. This approach supports further dividend growth and ensures that Microsoft remains at the forefront of the technology industry. Undoubtedly, Microsoft's dividend growth streak is particularly noteworthy. For 19 consecutive years, the company has consistently increased its dividends, reflecting its strong business model and reliable cash flow generation. This consistency provides investors with confidence in the company's ability to maintain and grow its dividend payouts over time. The combination of a strong balance sheet, significant earnings, and disciplined financial management makes Microsoft a cornerstone of Gates' dividend strategy. The strategic importance of Microsoft within the tech sector cannot be overstated. The company's dominance in software, cloud computing, and other technological advancements position it for continued success. With flagship products like Windows, Office, and Azure, Microsoft continues to secure its market leadership while expanding into emerging areas such as artificial intelligence and cybersecurity. This diversification ensures a steady revenue stream which supports its dividend payments. Gates' investment in Microsoft reflects his long-term confidence in the company's ability to generate substantial income and deliver sustained growth. As a result, Microsoft remains a vital component of Gates' portfolio. Then we have Waste Management, WM, a significant holder in Bill Gates' investment portfolio, reflecting his preference for stable, income-generating assets. Gates owns 35.2 million shares of Waste Management, with a current value of $7 billion. This investment yields an annual dividend rate of $3 per share, translating to an impressive $105 million in annual dividends for Gates. The substantial return from Waste Management highlights its strong position in his portfolio. The company's performance over the past decade has been remarkable, with a 10-year return of 359%, excluding dividends. This impressive return underscores Waste Management's ability to generate substantial shareholder value through capital appreciation and consistent dividend payments. The dividend yield stands at 1.45%, supported by a payout ratio of 43%. This indicates that Waste Management maintains a balanced approach, distributing a significant portion of its earnings to shareholders while retaining enough to reinvest in the business. If you analyze their 5-year dividend compound annual growth rate, it's at 8%, showcasing its commitment to steadily increasing shareholder returns. The company has consistently grown its dividends for 20 years, reflecting its robust financial health and operational efficiency. This long-term dividend growth is a testament to Waste Management's stable business model and its ability to generate reliable cash flows from its waste disposal and recycling operations. The essential nature of Waste Management services ensures continuous demand, providing a stable revenue stream that supports its dividend payments. The company's market leadership and extensive network of waste management facilities position it well for sustained growth. In addition to these dividend stocks, Gates also has some high-yielding stocks. Here we have the likes of Crown Castle Inc., CCI, a prominent high-yielding stock in Bill Gates' investment portfolio, reflecting his strategy of selecting reliable income-generating assets. Gates owns 1.4 million shares of Crown Castle, which brings in $8.8 million annually in dividends. As a real estate investment trust, Crown Castle stands out with a notable dividend yield of 6.12%. This high yield is particularly attractive to investors seeking steady income, and it underscores the company's commitment to returning substantial earnings to its shareholders. Crown Castle's business model revolves around providing essential infrastructure for wireless communication. It owns and operates over 40,000 cell towers and approximately 80,000 route miles of fiber supporting small cells and fiber solutions across the United States. This infrastructure is crucial for the growing demand for mobile data and connectivity, positioning Crown Castle as a key player in the telecommunications sector. The consistent demand for its services ensures a stable revenue stream, which in turn supports its robust dividend payouts. Over the past 9 years, Crown Castle has demonstrated consistent dividend growth, boasting a 5-year dividend compound annual growth rate of 7%. This steady increase in dividends highlights the company's strong financial health and its ability to generate reliable cash flows. The commitment to growing dividends is a crucial factor for income-focused investors like Gates. as it ensures that the investment not only provides immediate returns, but also grows over time, keeping pace with or exceeding inflation. The company's strategic investments in expanding its infrastructure network have solidified its market position and enhanced its growth prospects. By focusing on both macro towers and small cell deployments, the company is well positioned to capitalize on the ongoing expansion of 5G networks and the increasing need for high-speed, reliable mobile connectivity. This forward-thinking approach ensures that Crown Castle remains a valuable asset in Gates' portfolio, providing substantial and growing dividends year after year. Despite its mixed performance, Kraft Heinz Company, KHC, is one of the highest-yielding stocks in Bill Gates' portfolio. Gates owns 2.6 million Kraft Heinz shares, generating $4.1 million annually in dividends. The company offers a dividend yield of 4.8%, making it attractive to income-focused investors. However, its overall performance over the past decade has been less than stellar, with a 10-year return of minus 4.6%. This significant decline reflects challenges in the company's operations and market position. Kraft Heinz dividend history is a point of concern for many investors. The company previously paid a quarterly dividend of 63 cents per share, but cut it to 40 cents per share. This reduction highlights the financial difficulties Kraft Heinz has faced and raised questions about its ability to sustain and grow its dividend payouts in the future. The 5-year dividend compound annual growth rate of minus 4.8% further underscores the challenges the company has encountered in maintaining its dividend growth. Despite these setbacks, Kraft Heinz maintains a payout ratio of 53%, suggesting that it continues to prioritize returning earnings to shareholders. This payout ratio indicates that while the company has faced significant hurdles, it still allocates a considerable portion of its earnings to dividend payments. For Gates, this investment represents a strategic decision to hold on to a consumer staple company with a potential for long-term recovery, even amidst its current difficulties. And, by the way, Kraft Heinz is a major player in the consumer goods sector, producing well-known brands in the food and beverage industry. Its products are staples in households worldwide, ensuring a steady demand. This enduring demand for its products provides a foundation for potential stability and growth. Gates' investments in Kraft Heinz may reflect a belief in the company's ability to improve its performance and regain its footings in the market. Another key high-yielding stock in Bill Gates' portfolio is United Parcel Services, UPS, reflecting his strategy in investing in companies with reliable income and growth potential. Gates owns 755,000 UPS shares, generating $4.9 million annually in dividends. This investment highlights the company's role as a substantial contributor to his dividend income. So far, UPS has delivered a 10-year return of 32%, indicating steady growth in value. The company's dividend yield of 4.88% is particularly attractive to income-focused investors, providing a significant return on investment through regular dividend payments. The high payout ratio of 81% suggests that UPS prioritizes returning a substantial portion of its earnings to shareholders, reinforcing its commitment to dividend payments. The company's 5-year dividend compound annual growth rate, CAGR, of 11.7% underscores its strong track record of increasing dividends. This consistent growth is supported by UPS' robust financial performance and strategic positioning in the global logistics and delivery sector. The company's extensive network and essential services ensure continuous demand, providing a stable revenue stream that supports its dividend payouts. UPS has also shown consistent dividend growth for 14 years, reflecting its ability to generate reliable cash flows and maintain financial health. The cash flow payout ratio of 51% further solidifies this position, indicating that UPS can comfortably cover its dividend payments from its operational cash flow. This financial stability is crucial for sustaining and growing dividends, making UPS a dependable income-generating asset in Gates' portfolio. The company's strategic importance in the supply chain and logistics industry, particularly with the rise of e-commerce, positions it for continued growth. As online shopping and global trade expand, demand for reliable delivery services will only increase, further supporting its financial performance and dividend potential. So now, what do you think of Bill Gates' impressive dividend strategy? Are you inspired to explore dividend investing yourself? Comment below with your thoughts, and if you enjoyed this video, please give it a thumbs up. Remember to subscribe and turn on the notification bell for more amazing videos like this one.